Well, our call on the dollar is that it will fall this year, but it will be a fitful decline for the dollar, not an abrupt one. And certainly, I take the point that the market, I think, is overdone in starting to price in Fed cuts early next year. And in fact, even a sliver of a Fed cut late this year. So I think that's overdone.
So, sorry, Alvin, on this point, and good morning to you, my friend. I don't understand it. If the market is a discounting mechanism and the US markets and Apple and a whole host of other companies have declined aggressively and the bond yields have rallied aggressively and we have inversion in parts of the curve now as well, why is the dollar index trading significantly higher than where it was 6 months ago?
Well, part of it is that if you look at the dollar index, the DXY index, most of the components are actually the Western European currencies. The euro is the largest one. Sterling is the next largest one. Of course, we have issues in Europe too. Political issues in Europe, growth issues in Europe, and we have Brexit uncertainties coming up. So that has weighed against the Western European currencies when you measure them against the dollar, for sure. So because of that, the dollar index has been higher, as you mentioned, than 6 months ago.
Sorry, Jeff, you want to come back in?
Well, just to pick up on that, I mean, obviously we spent a lot of the programme early on discussing the likely outcome of trade discussions on Monday. I think the market's nervousness, both from an FX perspective and from an equity perspective, would be soothed if we were to make progress in this area. Do you think there's any likelihood that we will have a good news story on trade on Monday?
Well, I certainly think that the financial market turbulence that we've seen in the last few months is placing pressure on the US administration to come up with a trade deal, or at least not to let the trade dispute with China escalate further from here. Now, I think it's also fair to say that US-China trade relations is not going back to pre-2018 levels. So we're not going to see the rollback of all the tariffs that's been put in place. But I think there is a good chance that we would see at least a freezing of the current ceasefire that we have on escalating this further. So I think that itself would help to soothe markets, but we're not going back to pre-2018.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.